Thank you very much, and it's a great pleasure to be with you today. I've been asked to talk a little bit about how the microinsurance community has started to work to provide access to insurance to millions of people through mobile phones. MicroEnsure is part of a much wider community which is serving in excess of 500 million people, and insurance is growing very, very fast. Access to insurance for poor people has grown fast since, I think, the last survey in 2007, which had 70 million people. A recent survey by the ILO's Microinsurance Innovation Facility estimated that there were roughly 500 million people now who have access to insurance for the first time. So I've been asked to introduce a little bit about MicroEnsure and then talk about the work we've been doing in Ghana with a couple of the mobile phone networks. MicroEnsure is a dedicated microinsurance provider. We don't serve the commercial sector. There are certainly a wide range of players who are providing insurance to the poor, including many of the world's largest commercial insurance companies. We started in 2002 working within Opportunity International to provide a very basic range of insurance products, and we soon realized that poor people wanted a wide range of products, and in order to do that we needed to establish a dedicated platform, and that's really why MicroEnsure was born, following significant funding from the Gates Foundation. At the end of last year we were serving 3.4 million clients. Actually today, I just checked, we crossed 4 million clients, so more than 4 million clients being served by MicroEnsure today. And we are currently growing in excess of 200,000 new clients a month, principally with focus in Africa, but also in Asia through the Philippines and India. For me, I actually got involved from reinsurance into microinsurance because I found myself sitting under a tree talking to a group of ladies, and I'm sure many of you have done something similar, but this one lady really had a profound effect on my life, and she was trying to explain to me why or how her life needed assistance. And she said that her life was a little bit like a game of snakes and ladders or chutes and ladders. She was trying to work her way out of poverty, and microfinance organizations provided her with loans which were very helpful in helping her move her way out of poverty. But she was concerned why the development community wasn't there at the time of need in terms of funerals or floods or unexpected medical needs. And she likened those events to the snakes on the snakes and ladders board that caused her to slip back down into poverty. And so we see insurance, or the provision of insurance, as a safety net that stops people sliding back into poverty. But if we look at the data, then we can see that a very small number of people in the developing world really buy insurance. If you look at GDP, you can see that. But the statistics speak for themselves. More than a quarter of people who go to hospital in India, when they go into hospital, they're above the poverty line. When they come back out, they're below. So if we accept that poor people need insurance to stop them slipping back into poverty, then you have to ask yourself how to do that. And for us, we use this framework whereby we say that there are really three key roles that need to be performed. Someone has to carry the risk. This generally is insurance companies or reinsurance companies, but it can also be cooperatives. We then need someone who has access to the client base, so this is the front office. And these organizations need to be trusted by the poor, they need to be accessible, and they also need to be able to transact cash. And typically these organizations are microfinance organizations or mobile phone companies, although we have tried to work with retailers and a range of religious organizations as well. And then thirdly, there needs to be a back office, and this back office has to design products and processes. It needs to provide training and education to the consumers, and it needs to be able to collect biometric information about who the clients are. But the most important thing it does is pay claims. I think over the last 10 years, one of the key learnings is they're educated about insurance. They are elastic on price, but they're not elastic on claims turnaround time. So if you don't pay claims quickly, then you will very negatively affect demand. So within this framework, MicroEnsure's model has really evolved over the last 4 or 5 years. Initially, we started working with local insurance companies, but we became fairly frustrated that many of those insurance companies couldn't design products that were simple enough, simple so that they could be understood, but also simple so they could be administered cheaply. And so we started to set up our own reinsurance cell captives outside of the countries, using the local insurance companies to issue the policy, but then reinsuring the risk to the cell captive. As MicroEnsure, we've worked with a range of front office partners, including microfinance organizations, NGOs, VSLAs, and SACCOs. But we're really excited by working with the mobile phone companies, and we're working with a number of mobile phone companies now, including Tigo, MTN, U, and also, I can't tell you who it is, but a big Asian group of mobile phone networks in providing insurance to the poor. And we'll talk more about that in a minute. Our role is really, as I've said, to design products and processes, provide education, collect client data, and play a role in making sure claims are paid quickly. And whilst we started off as an insurance broker, we've recently become a reinsurance sole manager. We've also had to establish our own third-party administration functionality to pay health insurance claims, and we do some consulting work. So onto mobile phone networks. Basically, this all sprung out of some work we were doing with our clients, and we were asking our clients who they trusted. And it was very clear they didn't trust the insurance companies. They trusted the church or the synagogue or the mosque much more than they trusted their insurance company, and they trusted their mobile phone company by far the most. In fact, they also trusted Coca-Cola as a brand which is just about ubiquitous. And so we started to turn our minds to how insurance could be sold alongside these mobile phone offerings, and we realized that the mobile phone companies had an issue in terms of the loyalty of their customers, and they were interested in the ARPU, the average revenue per user, and also the churn rate. So we decided to see whether insurance would make customers more loyal. So we convinced an insurance company, or we worked with a range of partners to convince an insurance company to embed insurance into the airtime sale. And so these products, as we'll see in a minute, were offered to clients. The more airtime you bought, the more free insurance you received. And then the model has a second stage whereby you, having created a client base who now trust insurance for the first time and have seen that it works, you then start to sell freemium products. So these are kind of additional, you can add additional family members, or you can increase the indemnity limit. And then the third stage is to sell standalone products, which sometimes with the premiums being deducted from the airtime balance, and sometimes the premiums being collected through mobile wallets. I'm going to show you two examples. One is Tigo, which is a partnership with Tigo, Bima, Milvik, and a range of insurance companies. And this is the kind of first stage product. This is a product where the more airtime you spend, so you can see here, I think, these are the levels of airtime that you spend. So if you spend 5 CDs of airtime in January, then in February you receive 200 CDs of free insurance. If you spend 25 CDs in January, then you receive 800 CDs of free insurance. And you receive this text message, telling you how much airtime you spend every month and how much insurance you've got. And these text messages are a great way of educating the consumer base and obviously continuing to change client behavior. So of course the mobile phone companies are happy to continue paying these premiums if they're seeing increases in ARPU as a result of more loyal customers. And so if people are interested in that, we can talk about that. The second model is one that was launched with MTN, and MTN wanted to increase the uptake of their mobile wallet and the transactional volume across their wallet. Like the GSMA presentation highlighted, that there's huge variability between uptake and then usage of these systems. And so this was using a USSD menu which appears on your phone, and you can opt in. This is totally voluntary insurance. You can decide how much cover you would like to buy and which members of your family you'd like to cover. And so the premiums range from 35 cents up to $1.75 per month. This is deducted from your mobile wallet automatically once you have signed up and decided what you want. And there are obviously differing levels of cover according to the premium. And this product is a voluntary product, and the premiums are deducted from the mobile wallet. So just some of the kind of things that we've learned. I think it's been really exciting to us to see the take-up of these products. In Ghana last year, more than 1 million people signed up and have gained access to insurance for the first time. That meant that the market for insurance more than doubled in Ghana during the course of that time. Just to give you some idea, that means that more than 5,000 people a day are actually signing up for these products. And in partnership with Tigo and Milvik, these products are starting to expand to other countries as well. The second stage within the Tigo model was to introduce a new product called Extra, where you can pay, I think it's 1 CD per month to double your indemnity. So if you die, you get double the limit. MicroEnsure is then working with a large Asian-based mobile network operator with more than 100 million subscribers, and later this year we'll be launching a similar approach across a range of 5 Asian countries. Just want to touch basically on the challenges here. I think like all things in microinsurance, microinsurance is heavily dependent on the partners that distribute the product, and so if you want to be successful in providing insurance, you really need to understand what is going to motivate your partner. In the case of Tigo, that was increased ARPU and more loyal customers. In the case of MTN, it was higher take of the mobile wallet and more transactions. There are some regulatory risks and challenges that exist where insurance meets kind of branchless banking, and those things are being worked out, especially in relation to use of signatures. So typically in insurance, someone has to sign a piece of paper to say that they accept the insurance. Obviously, we're trying to get people to accept this using SMS, take up. So that's a bit of a challenge. Bearing in mind the time, I want to leave as much time as possible for questions. So I'll be quiet. If there are other questions, please do get in touch with me at info@microensure.com.